Bitcoin's on-chain distribution is becoming more and more decentralized. What exactly does this mean? Bitcoin has a very unique advantage. It is a transparent ledger. You can go on and using on-chain metrics, you can see all of the Bitcoin addresses and you can see what is in there in terms of a Bitcoin balance. I went last night and I did a deep dive looking at what is the centralization or the decentralization of the Bitcoin ownership on chain. What I found was very, very interesting. First, let's start with the 10,000 Bitcoin balances. So these are wallets on chain that have 10,000 or more Bitcoin in it. What you can see is that these peaked, the number of wallets that have at least 10,000 Bitcoin or more, peaked in October of 2018. Bitcoin's price was approximately $6,500 at the time, and it was right before that big puke down that signaled the bottom of the 2018 bear market. So 10,000 Bitcoin or more, the balance or the number of wallets with 10,000 or more Bitcoin in it peaked in October of 2018. If we go ahead and we look at 1,000 Bitcoin, so kind of an order of magnitude smaller, what we see here is that this peaked in February of 2021, earlier this year. There are currently about 2,100 Bitcoin addresses that hold 1,000 Bitcoin or more, which is similar to where we were throughout all of 2020. So what you can see is all through 2020, we were hovering right around 2,000 Bitcoin addresses with 1,000 Bitcoin or more in them. Then we had this big run up and then kind of a puke down. And now we are right back around 2,100 Bitcoin addresses on chain with at least 1,000 Bitcoin or more. If we go and we look at 100 Bitcoin, all the Bitcoin addresses that have at least 100 Bitcoin or more, what we can see is that the all-time high was the peak in February of 2017, at the beginning of the real bull market in 2017. And at the time, there was 18,500 Bitcoin addresses with at least 100 Bitcoin. But today, there's only about 16,100 Bitcoin addresses with 100 Bitcoin or more. So what you can see is 10,000, 1,000, or 100 Bitcoin in the balance of on-chain wallets. Those have all peaked. They've all hit an all-time high and then been trending downward. There's less and less whales on chain with these Bitcoin wallet addresses. So what if we go and we look at the opposite end of the spectrum? If we look at 0.01 Bitcoin or 0.1 Bitcoin as the balance. Well, first, here we have Bitcoin addresses with at least 0.01 Bitcoin in their balance. And what we can see here is that we continue to hit all-time high after all-time high. There are now 9.3 million Bitcoin addresses that hold at least 0.01 Bitcoin or more, just over $500 or so. If we look at Bitcoin addresses that hold 0.1 Bitcoin, about $5,000 to $6,000 worth of Bitcoin in their balance, we can see that continues to also hit all-time highs. You can see here that there are 3.28 million Bitcoin addresses that have at least 0.1 Bitcoin or more in their wallet. And so ultimately what we are watching is the continued stacking of sats by those at the lower end of the ownership. So the big whales, the people who owned 100, 1,000, 10,000 Bitcoin on chain, they continue to disperse their Bitcoin. They're selling into the market, and people at the lower end continue to buy. They continue to stack sats. And so ultimately, Bitcoin is becoming more and more decentralized. The distribution is getting into more and more people's hands of on-chain ownership. This is very, very important. I think of Bitcoin ownership or Bitcoin distribution on chain as one of a three-legged stool. First, you want to have decentralized ownership of the actual asset. Two is you want to have decentralized mining. And three is you want to have decentralized node operation. We know that mining has becoming more and more decentralized over time. After China banned Bitcoin mining in the country, we saw tons of people flood out of Inner Mongolia and other regions inside of China and spread all throughout the world. No longer is 60% of Bitcoin mining hash rate in China. Instead, it is now much more evenly distributed across the world. It got more decentralized over time. On top of that, we continue to see more and more Bitcoin nodes coming online. There are tens of thousands of Bitcoin nodes all around the world that continue to pop up, and that becomes more and more decentralized as well. So if you go back and you look at that three-legged stool, there's more decentralized ownership, there's more decentralized mining, and there's more decentralized node operations. That tells me that the network is not only healthy, but it continues to become more and more secure over time, which is exactly what you would want to see. What did you guys think when you saw some of these charts in terms of Bitcoin ownership, John?
It's great to see that more people are acquiring Bitcoin and kind of having the addresses. It's really tough because it's so decentralized that you can't tell if one individual actually owns both addresses. But obviously, when you have multiple people coming in and owning 0.1 Bitcoin, it's a big deal, right? The education has greatly widespread over the last few months and years about Bitcoin in general and cryptocurrencies. So it's great to see. I've always kind of worried that if one person owns 10% of the asset of an asset that's supposed to be a store of value for everyone, it's really tough to have everyone else own it. So I like seeing stuff like this.
Yeah, I think it's interesting too, because the charts that you were just showing, right? If you look at the accounts that the wallets that own over 10,000 Bitcoin, over 1,000 and downward, they're all declining from the previous highs, right? And they're continuing to stay at those depressed levels that previous to the response that we had seen in October of 2018 or so on. So I think that the accounts in general with 0.01 that continue to rise to all-time highs is a good sign, because to your point, it's becoming much more decentralized than it was previously. And I think that was one of the knocks that people pointed to earlier on in the in the process of Bitcoin, whether it was 2, 3, 4, 5, or 6 years ago, was that it wasn't nearly as decentralized from an ownership perspective, right? And if there was only 21 million, a lot of this would be transferred to wealthy people who could afford to kind of ape into the asset and buy as much as possible. And what we found is that has continued to trend downward over time and change.
The other piece that I think is important to call out in this analysis is that this is not total kind of data set, right? What I mean by that is this is just on-chain Bitcoin ownership. So there's still people who own via and purchase via OTC desks that buy through exchanges. They have exchange wallets. They have software wallets. They have hardware wallets. Like there's a couple of different ways that people can own. Some of that is counted inside of this on-chain distribution. Some of it is not. And so obviously, if you come in and you buy, let's say, Bitcoin on Coinbase or Gemini, BlockFi, Kraken, right? A whole multitude of various platforms. What you can see is that there's inflows to the exchange in that wallet, but what you can't see is the breakdown of all of the various customers. So take the largest US-based exchange, which is Coinbase. They have, about 60 million registered users or so. You cannot see the difference of who owns what there. They know, right, because it's their platform, but that is different. And so it makes this analysis a little bit hard, because it's not just on-chain ownership. It's also what's going on in those exchanges as well. But at least we use the data set that we have, which is the on-chain ownership, and that is definitely getting more and more decentralized, and also more people are stacking sats or kind of dollar cost averaging into what ultimately will become probably pretty material Bitcoin positions.
I mean, the more decentralized and the more dispersed the ownership is, the better I think it is for Bitcoin. You see all these others, and you don't like talking about the altcoins, but when the guy who created it owns 60 to 70% of the supply, that's a big deal, because he can crash the price if he ever tries to sell everything that they own or whatever, right? So I think the more decentralized and the more disruptive or the more distributed the ownership of Bitcoin is, the better it is for the asset.
Yeah, I mean, I think we talk about this all the time also, but it's Bitcoin and everything else, right? Bitcoin is the most decentralized distributed technology from a money standpoint that's ever been created. So I think people need to take these things and see it as a good thing when these continue to trend in the right direction from a decentralization standpoint, because anytime the Bitcoin network becomes stronger, right? More people are mining, there's more wallets with more kind of holding individual amounts of Bitcoin relative to one big holder. I think that's a good thing.
The piece that I think folks forget about this is that it's a security mechanism. Having decentralized ownership is very much a benefit or an advantage from a security standpoint. It's not just about, all of these other people get economic empowerment. That is important, right? And the more people who get access to sound money and can prevent the negative effects of currency debasement, the better. But also, there is a huge piece of the security. If everyone, if one person owned all the Bitcoin, that wouldn't be too good for Bitcoin from a kind of a single point of failure, or there's an ability to go after that one person.
You can manipulate it, right?
All kinds of bad stuff.
Bitcoin optimizes for security.